Hello everyone, and thanks for tuning into the Financial Investor channel. My name is Brent, and today we're going to be covering our 5 stocks with ex-dividends next week. Now, I do have 5 stocks for you guys. We have Unitil Corporation, we have Wisconsin Energy, Walgreens Boots Alliance, Bar Harbor Bank Shares, and Park National Corp. Now, these were all pre-screened a little bit here, so these all have price to earnings less than 25, yields greater than 2.5, and I went ahead and screened these for a yield over price right now because I was looking for some stocks that may be coming down at a good potential buy for the upcoming week. If you guys are interested in buying, definitely take a look at these and we'll go ahead and jump into it. So we'll be covering the dividend dates, price comparison to the yield, PE comparison to the industry average, the payout ratio, dividend history, and a few other items. So these 5 stocks are ordered by the ex-dividend dates February 12th through the 16th. So the very first stock that we have here is ticker symbol UTL. So this Unitil Corp engages in the retail distribution of electricity in the southeastern seacoast and capital city areas of New Hampshire. Unitil Corporation serves over 100,000 electric customers and 15,000 natural gas customers. So pretty large utility company. They've been going on somewhat of a decline due to rising interest rates. As they take out debt, they're going to have to pay it back at a much higher interest rate, which does hurt their bottom line. So here we can see their revenue. It's about, it has increased over this chart here is over the 5 years. So all the revenue, free cash flow, and net income charts over the last 5 years. So you can see that their revenue has increased by 150 million, or about 50 million, a little over 50 million over the last 5 years. Their net income, it's sitting at $29 million, and their free cash flow has declined by negative $33.10 million. So they may have been using some of their free cash flow for small acquisitions or had to use some of the free cash flow to pay some dividends. So that would be something to look into. Why is their free cash flow down a bit? So taking a look just at their 1-year chart here, we can see that their current yield is sitting at a 3.43. They pay out 36 cents and half a cent for each share each quarter, and they're currently the current PE ratio is at 20.36, and they're currently priced at $41.95. So it's very cheap. It's probably the cheapest point in the last year that you be able to get into this position, and they're currently trading at a book value of 1.84. So when charted, it does show the current stock does have a higher yield to price, which may indicate it is undervalued at this time. The stock is below the industry price earnings average of. The average showed up weird on my Morningstar. It showed up as an 857. I don't believe that's right. I believe for the utility, I think it's somewhere in the 26, 27 range. But that's the number that I pulled off for the industry when I looked it over on Morningstar. So it is sitting above 60% payout ratio, but again, it's a utility company. It's pretty well set there. Dividend growth for the last 3 years. It's not recession proof. That's something I have to remove. This price to book value is at 1.84, which is lower than 3.0, where value investors would consider a value. So the stock is trading at around a 20.3, 20.5 PE. In the industry, it's probably around up 24 to 27, I believe. So current dividend yield is at a 3.47. Annualized payout, they pay out $1.46 for each share that you own for the entire year. They do have a payout ratio of 76.05. Dividend growth 3 years, and the last time they increased their dividend was by 1.39. So very slow grower. You'd have to hold the stock quite a while for your initial investment to double. Number 2 is ticker symbol WEC, Wisconsin Energy. It's based in Milwaukee and one of the nation's premier energy companies, serving more than 1.1 million electric customers in Wisconsin and Michigan, Upper Peninsula, and more than 1 million natural gas customers in Wisconsin. The company's principal utilities are Wheat Energies and Edison Salt Electric. So one thing we didn't cover over here was their ex-dividend date for UTL is 13 February, which is Tuesday, so you do need to buy the stock on Monday or prior, and then you would get paid out within the same month on the 28th of February. So number two, again, their ex-dividend date is on Tuesday again. So again, you do need to buy the stock on Monday or prior, and then you would get paid out on the very 1st of March. Now this company has done very well over the last 5 years. They started initially around $4.5 billion back in revenue. They've now almost doubled at $7.64 billion in current revenue. Their net income has also increased over those 5 years, whereas they may have started roughly at $1 billion net income. They have been slowly creeping up. They're sitting now at a 1.2 mark. Their free cash flow has declined slightly, but at the same time, this is a utility company, so they may be doing, buying smaller companies or doing some sort of acquisition. So that would be something to take a look at where their free cash flow is going. Now, taking a look at their 1-year chart here, they pay 55 cents each share. They're priced at $60, which isn't too bad. That gives them a yield of 3.46, PE ratio of 15.88, and a price to book value of 2.00, which is below average. I see right about for the year, it's sitting a little bit below where they would normally be sitting at. You can see that their price is at $60.20. You wouldn't have bought, this is back since, prior to May of 2017 is when you would be able to buy into this position. But again, utility company getting hurt by rising interest rates. Number 3, we have ticker symbol WBA. This is Walgreens Boot Alliance. It's formerly known as Walgreens Company. It's the largest drugstore chain in the United States. The company operates over 10,000 stores in all 50 states. I know I have 2 here locally, and they have over 176,000 employees. The company does offer consumer goods and services, a pharmacy, and health and wellness services. It offers its products and services through drugstores, through the mail, by telephone, and online. Their ex-dividend date is again Tuesday, February 14th, so you do need to buy this stock on Monday or prior, and then you would be eligible for the ex-dividend date. This is actually 14th is, what is that? That's Wednesday. So let me fix that real quick here. Where'd my button? Okay, so their ex-dividend date is on 14 February, which is Wednesday. You would then get paid out on the 12th of March, so right next month. Now here again, look at that revenue increasing slowly over the last half a years, over the last 2.5 years, and then recently spiked up between 2015 and 16. They are still in an increase here, sitting at $120.4 billion in revenue. Their net income seems to be stable. It's at a 4.07 billion, and their free cash flow has been stable at 6.3 billion. So very stable company. Their revenue has been increasing, but their net income has not been increasing with their revenue. So Walgreens here, taking a look at just their 1 year, they pay 40 cents per share, which is very nice. They're currently priced at $71.87, which gives them a current yield of 2.16. Their price to earnings ratio is 19.85, and their current price to book value is at a 2.74. So I was trying to remove some of the yields that were 2.5 and below, but Walgreens, it had great long-term just kind of growth. Plus, it's such a huge company. It looked like a great potential buy to add to anyone's portfolio. Now, Walgreens, when charted, it does show the current stock does have a higher yield of a price, which would indicate it may be undervalued at this time. The stock is under industry price to earnings average, below 60% payout ratio, dividend growth for 42 years, so this is very recession proof. Price to book value of 2.74, which is lower than 3.0, where value investors would consider a value. So the stock is trading at a 19.5, industry 20.9, dividend yield 2.23, 2.16, right around that frame. They may have recently increased their dividend, that's why those numbers may be slightly off. Annualized payout, they pay $1.60 per share, so 80. Yeah, 80 times 2 is 160, so that's about right. Payout ratio 28%, dividend growth 42 years, and the last time they increased their dividend was by 6.67%. So very nice dividend increase there. Number 4, we have ticker symbol BHB. This is the Bar Harbor Bank share, and they're a company that provides commercial and retail banking services in Washington and Maine. you can see here that their ex-dividend is on the 14th of February, which is Wednesday, so you do need to buy this stock on Tuesday or prior to be eligible for the payout date on the 15th of March. Their revenue has been increasing very nicely. 5 years ago, they were roughly about $60 million in revenue. So they've almost doubled their revenue. They're sitting at $118.14 million in revenue. Their free cash flow is at $24.31 million. So it's been going nice. These little spikes here that take place, that could be an acquisition that came, they did an acquisition, and then these other spikes, maybe the acquisition didn't go through, so they had to add their free cash flow back in. And who knows, again, go back to those 10Ks, look for those years, and their net income has been slowly increasing, which is nice there. When you see revenue increasing, it's nice to see their net income also increase along the line. Now, 1 year chart here, taking a look, we can see that they pay out 18 cents, a little over half a cent there, 18 cents and a half per each share each quarter. This has been paying out the same since back in 2007. Actually, this isn't the one that has been paying out since 2007. I marked it down here. Okay, so this one's been paying out dividend growth for 8 years, so they've actually increased their dividends for the last 8 years. So the last time they increased it was about a year ago. This one's probably due for an increase. They're currently priced at $26.99. You can see this stock has a lot of fluctuations. So if you're looking to swing trade or day trade or such, this could be a good potential buy. Buying low and selling high. It gives it a yield of 2.77%, a PE ratio of 15.88, and a price to book value of 1.17. So BHB stock, when charted, it does show that the current stock has a higher yield of a price, which would indicate it may be undervalued at this time. The stock is below industry price earnings average, below 60% payout ratio, dividend growth for 8 years. Its price to book value is at 1.17, which is lower than 3.0, where value investors would consider a value. It's currently sitting at a stock value of 17.7, 15.8. The industry is around 19.8. The dividend yield is right around 2.77. They pay out 75 cents for the entire year for each share. That gives them, they also have a payout ratio of 23.2, so very low dividend growth for the last 8 years, but they have very slow dividend growth at 1.85%. Number 5, we have ticker symbol PRK. This is the Park National Corp, and they engage in commercial banking and trust business primarily in Ohio. It operates over 137 offices across 29 Ohio counties, and so on. Their ex-dividend date there is Thursday, February 15th, so you do need to buy the stock on Wednesday or prior to be eligible for the payout date on the 9th of March. This stock here has been nicely increasing their revenues. Their free cash flow has came down between 2013 going into 2014, bottoming out there before 2015, and then has been on a slow increase. So maybe during the 2013, there was like a mid crash there. Maybe they used some of their free cash flow in order to purchase some parks. I'm not sure what kind of stuff they kind of go over, but they do banking and trust, so maybe they did some sort of acquisitions, or during that same time frame had to cut or maintain their dividends with that free cash flow. Their net income looks to be a little bit stable or decreasing there. It looks like it did increase slightly, but not as much as their revenue has. Taking a look here, just over the last year here, you can see that they pay out 94 cents for each share each quarter. They're currently priced at $100.96. That gives them a yield of 3.72%, PE ratio of 18.6, and a price to book at 2.04. So ticker symbol PRK, when charted, it does show the current stock has a higher yield over price, which would indicate it may be undervalued at this time. The stock is under in the industry price earnings average, below 60% payout ratio, dividend growth for 0 years, price to book value of 2.04, which is lower than 3.0, where value investors would consider a value. Now the stock is trading in 19.1, industry 19.8, dividend 3.72. They pay out $3.76 for each share, so basically $3.76 for every $100 you have invested in that company. Their payout ratio 53.06. No dividend growth over 10 years. The last time they increased their dividend was back in 2007, and they increased their dividend from 93 cents to 94 cents. So that was an increase of 1%. So not a good stock. It could be a good buy and hold stock if you're not looking for increasing dividends, but dividend growth investors are looking for those increasing dividends year over year. So if I were to pick just one stock to add to my portfolio, I would definitely choose Walgreens. They have increasing revenue. Their net income looks to have increased or a little bit maybe decreased. Their free cash flow, everything looks stable here. Their revenue has been going up. Their numbers here as far as price to book, their PE ratio, their dividend, their yield is a little low, but it's also at a potential buying opportunity. You can see here over the last year, over the last year this stock has trended down south. So it's in that retail sector with Amazon, JP Morgan, Berkshire Hathaway going into the pharmaceutical company or the pharmaceutical business. Walgreens could be potentially hurt. Rite Aid has also been hurt, and a couple other pharmaceutical companies and health related. So in that sector. So maybe, taking a look at some of these other ones as potential buys. This one looks pretty decent, but of course, everything here you would also have to take a look at. Tomorrow I'm coming out with a video of how to find ex-dividend dates and kind of screen stocks for yourself. If you guys would like to see upcoming stocks with ex-dividend dates, either days, weeks, or months in advance, I'm going to go ahead and show that to you guys tomorrow. So go ahead and stay tuned for that video coming out at 8 a.m. Pacific time on Thursday. So that is it for this video. I do want to thank every single one of you guys for staying around and watching up until this point. If you are brand new to my channel, go ahead and hit the like button, subscribe for future financial videos. If you have any questions about anything that was covered today, go ahead and leave them in the comments below. I always reply back to your guys' comments. And of course, as a friendly disclaimer, I am not a tax professional or financial advisor. The information provided is my opinion for entertainment and fun. This is just me as a financial investor trying to help others make their money work for them. If you have any questions, go ahead and leave them in the comments below. I do have a couple links on here on how to create your very own dividend snowball effect, which is what I'm kind of working towards creating, as well as also increasing anyways. So that is it for this video. Thank you guys for tuning in. I will see you next time. Have a great day. Bye.